Welcome back to the Mortgage Minute. Today we're going to talk a little bit about what makes up mortgage rates and how those are determined. But basically it's a couple different factors. We separate them into two different things. You have market factors and then you have personal factors. So what are those? Market factors, you're talking things like the Federal Reserve, bonds, you got constant maturity, treasury, health of the general economy, inflation, a couple other things like that. When we're talking about personal factors, you're talking things like credit scores, down payments, and loan to value, the occupancy type, property type, loan type, that kind of stuff. So those are the two different factors you're looking at when you are calculating an interest rate. Basically, personal factors measure out risk type, essentially, on a specific loan. So when we're talking risk type, what do we mean? Essentially, the riskier it is to lend money, your rate is going to be higher. So for today's example, we're going to use some blocks just to kind of illustrate those risk factors. So starting out with our benchmark rate, it's the same on all of those. Let's say these two borrowers, borrower 1, borrower 2, they're both buying a home using a conventional loan. Same risk factor there. Let's say borrower 1 has the ability to put 20% down, where borrower 2 can only put 10% down. So a bit less risky on this end. That's why this one has a little bit more risk layers. Borrower 1, let's say, is buying a primary residence where he's going to live in it, and borrower 2 is trying to buy a secondary home. Okay, let's go ahead and say they are both single-family homes, so same risk factor there. But lastly, let's go ahead and say borrower 1 has a 780 credit score and borrower 2 has a 720 credit score. So based off those factors, you can see that there's more risk giving a loan to borrower 2 versus borrower 1. So the bank, when they look at this, they say, okay, let's go ahead and give this guy a little bit lower rate than this guy because he is less risky as far as his profile goes. So that's essentially how rates are calculated. If you guys have any questions on basically what your profile might look like, feel free to reach out. I'd be more than happy to kind of go through and explain a little bit more, or just kind of let you know where you sit as far as interest rates go and your risk eligibility. But if you have any questions, give me a call and we can chat. Have a good day.